Assalamualaikum and hi.
Hi.
Before that, we want to introduce ourselves.
My name is Ammar bin Anirul.
My name is Durratun Najhah binti Muhammad Zamri.
My name is Siti Aida binti Abdul Jabbar.
My name is Muhammad Fikri Rahman.
So, let's start.
Hey, I am Durratun. I will explain about accounting policies, accounting basis, and accounting estimate. Accounting policies are the internal policies set by the entity to process, measure, recognize, record, as well as disclose the specific item or transaction in its financial statement. Accounting policies might be different from one company to another. However, those policies are tailored to meet the specific international accounting standard or other standard bodies like local standards or regulations related to the purpose of financial reporting. Example of accounting policies are financial instrument and impairment losses of financial instrument. Let's look to the application by the companies of accounting policies in the scope of inventory. Second application by the company of the accounting policies is revenue. Third application by company of accounting policies is earning per ordinary share. Accounting basis is a several system for recognizing revenue and expenses for accounting purpose. There are two main bases for accounting, which are cash accounting and accrual accounting. A change in the basis of accounting can be a major disclosure that would be of considerable interest to the user of financial statement, since this can have an immediate impact of the financial result and financial position of a business. Example of accounting basis are accounting payable and accounting receivable. Application by the companies on accounting basis in the scope of trade and other payables are as follows. Second application by the companies on accounting basis is property, plant and equipment. Last application by the companies on accounting basis is dividends. Accounting estimate is an approximation of the sum to be debited or credited on the product on which there are no precise means of measurement. They are based on the knowledge and judgment gained from the experience and training. For the financial statement, they are used to calculate the carrying sum of assets and liabilities and the corresponding benefit or loss for the period over which those sums cannot be calculated with accuracy and certainty. Example of accounting estimate are depreciation and fair value. Application by the companies on accounting estimate in the scope of depreciation is as below. Second application by the companies on accounting estimate is inventories.
Third application by the company is fair value. Hello everyone, my name is Siti Aida binti Abdul Jabbar. Today, I will explain about MFRS 101, which is presentation of financial statement. Let's start. So, this is what will be discussed in the MFRS 101 presentation of financial statement. First, scope. Second, measurement. Third, recognition. Fourth, disclosure. And last but not least, the application and compliance of MFRS 101. For the scope of MFRS 101, an entity must apply MFRS while preparing and presenting the financial statement. For the measurement of MFRS 101, there is two of them. The first one is going concern and the second one is accrual basis of accounting. For the going concern, management shall announce the ability of the entity to continue, and the management takes into account all available information for the future. For the accrual basis of accounting, the entity prepares its financial statements using the accrual basis of accounting. The entity then recognizes an assets, liabilities, equity, income, and expenses. Next, for the recognition of MFRS 101, financial statement represent the financial position and financial performance of the entity. The objective of financial statements is to provide information about the financial position, financial performance, and cash flow of the entity. In order to achieve that, financial statements provide the information about their first, assets, second, liabilities, third, equity, fourth, income and expenses, fifth, contribution and distribution to the owner, and last but not least, the cash flow of the entity. For the disclosure of MFRS 101, an entity must disclose in the summary of significant accounting policies about the measurement basis used in the preparation of financial statement or other accounting policies used that are relevant to an understanding of financial statement. The company that we have chosen for the purpose of application and compliance of MFRS 101 is Cubi Metals Industries Berhad and Perusahaan Sadu Timah Malaysia Perstima Berhad. As for Cubi Metal Industries Berhad, the financial statement have been prepared under the historical cost convention. For Perusahaan Sadu Timah Malaysia Perstima Berhad, the financial statement have been prepared on the historical cost basis. The accounting period for Cubi Metal Industries Berhad is 31st December 2018. As for Perusahaan Sadu Timah Malaysia Perstima Berhad, the accounting period is 31st March 2019. For Cubi Metal Industries Berhad, the financial statement is presented in Ringgit Malaysia and rounded to the nearest thousand. For Perusahaan Sadu Timah Malaysia Perstima Berhad, the financial statements is presented in Ringgit Malaysia and rounded to the nearest thousand. Next, for Cubi Metal Industries Berhad, financial statements have been prepared in accordance with MFRS, IFRS, and provisions of the Companies Act 2016 in Malaysia. As for Perusahaan Sadu Timah Malaysia Perstima Berhad, financial statements have been prepared in accordance with MFRS, IFRS, and the requirements of the Companies Act 2016 in Malaysia. For Cubi Metal Industries Berhad, the financial statements were authorized for issue in accordance with a resolution by the Board of Directors on 29 March 2019. For Perusahaan Sadu Timah Malaysia Perstima Berhad, the financial statements were authorized for issue by the Board of Directors on 5th July 2019.
Hello, my name is Cik Ammar bin Cik Aniru. Today I want to present about MFRS 13. First, the scope of MFRS 13. This MFRS applies when another MFRS requires or permits fair value measurement of disclosure about fair value measurement. Next is the asset or liability of measurement. Fair value measurement is for a particular asset or liability. The effect of the measurement arising will differ depending on how that characteristic taken into account. Transaction is a fair value measurement assumes that the asset or liability is exchanged in an orderly transaction. The transaction to sell the asset's liability takes over either in the principal market for the asset or in the absence of principal market. Market participants. An entity shall measure the fair value of an asset or liability using the assumption. An entity need not identify specific market participant, considering factors specific all the following: the asset or liability, the principal market for the asset, market participants. The last for the measurement is the price. Fair value is the price that would be received to sell an asset or paid to transfer a liability in orderly transaction. Recognition. First, entities do not necessarily sell assets at the price paid to acquire them. In many cases, the transaction price will equal the fair value. An entity shall take into account factors to the transaction and to the asset or liability. Lastly, the entity shall recognize the resulting gain or loss in profit or loss. Disclosure. An entity shall disclose information that helps user of its financial statement access both of the following: for asset and liability that are measured at fair value on a recurring, and for recurring fair value measurement using significant unobservable inputs. Application and compliance of MFRS 13. Cubi Metal Industries Berhad. Financial instruments that are not carried at fair value and whose carrying amounts are reasonable approximation of fair value. The carrying amounts of financial assets and liabilities, such as trade and other receivable, trade and other payables, and borrowings, are reasonable approximation of fair value due to their short-term nature. For Peristiwa Berhad, fair value of an asset or liability except for share-based payment and lease transaction is determined as the price that would be received to sell an asset or paid to transfer a liability in orderly transaction between market participants at the measurement date. Application for Cubi Metal Industries Berhad. Derivative is the fair value of a forward exchange contract is the amount that would be payable or receivable upon terminations of the outstanding position arising and is determined by reference to the difference between the contracted rate and the forward exchange rate as at the end of the recording period applied to a contract of similar amount and maturity profile. For Peristiwa Berhad, the measurement assumes the transaction to sell the asset or transfer the liability takes place either in the principal market or in the absence of principal market in the most advantageous market. For Cubi Metal Industries Berhad, quoted investment is the fair value of quoted investments in Malaysia is determined by reference to the exchange quote market bid price as the close of the business on the end of the reporting period. Peristiwa Berhad, for non-financial asset, the fair value measurement takes into account a market participant's ability to generate economic benefit by using the asset in its highest and best use or by selling it to another market participant that would use the asset in its highest and best use. The application and compliance of Cubi Metal Industries Berhad. Fair value hierarchy. Level 1. Fair value measurement are those derived from quoted price in active markets for identical assets or liabilities. Level 2. Fair value measurement are those derived from inputs other than quoted prices include within level 1 that are observable for the assets or liability either directly or indirectly. Level 3, fair value measurement are those derived from inputs for the assets or liability that are not based on observable market data. Peristiwa Berhad Fair Value Hierarchy. Level 1, quoted prices in active market for identical asset or liability that the group can access at the measurement date. Level 2, inputs other than quoted prices include within level 1 that are observable for the assets or liability, either directly or indirectly. Level 3, unobservable inputs for the assets or liability.
Hello, my name is Muhammad Fikri bin Abdul Rahman. Today, I will explain about MFRS 16. Next, what is scope of MFRS 16? MFRS 16 an entity shall apply this standard to all leases, including lease of right-use asset, except first, leases to explore for use mineral, oil, and natural gas. Second, license of intellectual property granted by a lessor. Then, lastly, is leases of biological. What is measurement in MFRS 16? First, we have initial measurement. A lessee shall measure the right of use asset at cost. Then, a lessee shall measure the lease liability at the present value of the lease payment, and lease payment discounted using interest rate. The next measurement is subsequent measurement. After the commencement date, a lessee shall measure the right of use of asset apply cost model unless it applies either of the measurement model. After the commencement date, a lessee measure the lease liability such as increasing carrying amount, reducing carrying amount, and lastly, remeasuring the carrying amount to any reassessment. So, what is recognition? At the commencement date, a lessee shall recognize a right of use date and a lease liability. Then, what is disclosure? For the lessee, objective lessee in the disclosure is to disclose information in notes together with financial position, statement profit or loss, and statement cash flow. Objective lessor in the disclosure is to report details in notes along with financial status, benefit or loss statement, and cash flow statement, give a basis for users to assess the effect of leases. Now, we have Chow B Metal Industries Berhad with Perusahaan Sadur Timah Malaysia Peristiwa Berhad for application and compliance of MFRS 16. Firstly, Chow B Metal Industry Berhad have right of use asset comprise premise, while Peristiwa, upon initial recognition, the lease asset is measured at an amount equal to the lower of its fair value and the present value of the minimum lease payments. Secondly, Chow B Metal Industry Berhad, subsequent to initial recognition, the right of use asset are measured at cost less any accumulated amortization, accumulated impairment losses, and adjusted for any remeasurement of lease liabilities, while Peristiwa, subsequent to initial recognition, the asset is accounted for in accordance with the accounting policy applicable to that asset. Thirdly, there is no impact to the group and the company's retained earnings as at 1st January 2018 for the Chow B Metal Industry Berhad. And for the Peristiwa, contingent lease payment are accounted for by revising the minimum lease payment over the remaining term. Last but not least, for the Chow B Metal Industry Berhad, subsequent to initial recognition, the group and the company measure the lease liabilities by increasing the carrying amount to reflect the interest on the lease liabilities, reducing carrying amount to reflect lease payment made, and remeasuring the carrying amount to reflect any reassessment or lease modification. And for the peristima, the finance expense is allocated to each period during the lease term so as to produce a constant periodic rate of interest on the remaining balance of the liability.
That's all from us. Thank you.